Orient Cement, the stock which is trading with losses today after a subdued third quarter performance. The revenues for the quarter gone by were largely flattish, while the company posted a net loss figure. And let's discuss actually what were the factors at play with Mr. Deepak Khetrapal, who is the MD and CEO of the company. Mr. Khetrapal, good afternoon and thanks a lot for joining us. A subdued quarter once again. There's a degrowth in top line. I think realizations were also down for the quarter. Volume growth down. What would you attribute these numbers to? Is it a slowdown in the demand environment, or there are some operational parameters also?
No, whatever's, let's say, subdued, as you call it, the performance is largely a result of the, I think, overall slowdown which has been known in the industry, known in the market throughout the last quarter. I don't think it comes as a surprise to anyone. The whole industry, and particularly if we look at the situation in southern India and more importantly the states in which we have large exposure, which is Telangana, Andhra Pradesh. In those markets, I think it's been a complete meltdown in demand with the Andhra Pradesh situation being known to many people regarding all the projects are held up there. And also in Telangana, the drop is because till 2 quarters back, a huge amount of construction activity on the Kaleshwaram project was being carried on by Telangana government, which obviously was consuming a lot of cement. The moment that project gets completed, obviously there's no other project of similar size which is coming in to replace that demand. So these are the two factors because of which the degrowth in Telangana, Andhra Pradesh combined is being estimated at in excess of 25% in Q3 over the same quarter last year. And even other markets that we operate, Maharashtra, our estimate is that Maharashtra has not grown, but there the degrowth has been limited to a marginal about 1% or so. So nothing to do with our internal operational challenges in terms of not being able to deliver what we had to. But yeah, the slowdown in the demand of cement largely in AP Telangana and also partly in Maharashtra state, which as we all know is the largest consuming state for cement in India. And for us also it's the largest state for our sales. And that has impacted. You touched upon the operational challenges. In fact, on the operations side, we would say that if you go through the details and do a per ton analysis, we seem to have done rather well in terms of managing our costs better, having huge savings in the power and fuel costs. So all those things have worked in our favor, but obviously none of that was good enough even collectively to overcome the challenge that was posed by the slowdown in demand.
You touched upon the operational parameters. What I wanted to check, were there any operational parameters at play for a subdued performance? But what was the EBITDA per ton, if you could give us a number versus September quarter?
The EBITDA per ton this year we've had is 390 per ton, which in the absolute terms we've had EBITDA of about 58 crores. Over last year's same quarter we had an EBITDA of just 42 crores. So there's a growth in EBITDA, and to that extent, yes, we feel better. But the disappointment is coming because we have had, I think, overall expectation in the market much higher. But if we compare with our performance, let's say in the last 2 quarters, last 2 years in quarter 3, both the previous years we were at 42 crores of EBITDA. And this year we are at 58. So there is positive growth. What is looking subdued is actually at the PBT or PAT level, which is largely a function of our having started a project nearly a little over 3 years ago at a cost of 2,000 crores. So the interest burden and the depreciation burden of that in a lean quarter, it tends to overwhelm the EBITDA, and that's why we have at the PBT level we have a loss, but EBITDA level there's definitely growth.
Of course, we've seen that quarter 3 EBITDA has recovered nearly 50%. That's
Exactly.
What the numbers are throwing up. But give us a sense, since you mentioned the numbers have also been impacted because of the exposure to southern market. We actually saw that in Ramco Cement's number also yesterday. If you could just help us with regard to your geographical mix, what percentage of the revenues are coming from the southern market, sir?
In southern markets, we end up selling nearly 40% of our cement. And another, I would say nearly 50% actually comes from the western markets, which is largely Maharashtra and part of it is Gujarat. So those are the two, let's say, main areas for us. And within South, we say out of the 40% that I said, more than 30% is actually AP Telangana, with Karnataka accounting for around 10%.
Okay. And with regard to cement prices, sir, there's been a lot of chatter that the companies have been increasing prices of late. Could you just give us a sense, what's the average selling price right now versus the end of the quarter gone by? That's the December quarter. Have we actually seen any uptick in prices? Because there are some quarters also mentioning that on ground, the demand remains still subdued.
The demand remains subdued compared to what we had in the same quarter last year. Just to, again, I don't know whether you have the data available. The Q4 FY19 was actually a bumper quarter for the entire industry, including for our company. So if you start comparing Q4 of last year with what we are seeing in the so far of the current quarter, yes, maybe it is not looking as strong as last year was. But if we compare sequentially, the recovery in demand that we have experienced in the month of December, that is continuing in the month of January. The recovery in prices in January has been there in patches. In certain markets in Western India, prices have moved up depending on which market you talk about, between 10 to maybe around 15 rupees a bag. Whereas in South, the price recovery is very marginal. So from that, it's a mixed picture. Demand recovery over, I would say, the previous 6-7 months has been there in December, continuing in January, and price recovery in January, I would call them green shoots rather than saying a higher cement price has been established in the market. But yes, there are green shoots available.
There are green shoots, but let's see if certain markets continue to be a drag for players like you. You said there was a project of 2,000 crore which is underway. Could you tell us what's the current debt on the books right now and how do you plan to repay that?
The project is not underway. This project was commissioned about 3 years ago. That's what I said. And that's why the interest depreciation comes on the P&L anyway. The net debt is little over 1,200 crores. And the repayment of that is as per the completely agreed the contractual terms with the banks. Which, like I said, is a term loan to be repaid over 15 years. And this is the third year of the loan. So we are repaying that as per the schedule with the banks.
Mr. Khetrapal, one final question. Compared to the return ratios that the business by and large earned, and not necessarily Orient Cement, but by and large the cement business earned a few years ago, that's come off. Do you reckon that over the course of the next 3 or 4 years, the return ratios at large could be taken up, if not for the industry, then for Orient Cement from where they are right now?
I think for Orient Cement and for the industry as a whole, these ratios, I think, must go up. Largely due to the fact that the huge, I would say, when the industry results used to be very good, now I'm talking about, going back year 12, 13 or thereabouts, the industry was seeing a much better picture in terms of the returns on investment. And then a huge amount of new capacity got added to the markets, which led to the supply overhang. And after that, we've actually seen the entire industry suffering. We may have suffered a little bit more compared to the larger pan-India players. But the current rates that we have on the capital employed, I don't think are sustainable for the industry or for any investor also to allocate resources to this industry. So to my mind, if the industry needs to remain attractive for fresh investments, these returns have to go up. At Orient Cement, in any case, we are working towards that. And in the case of Orient Cement specifically, if I can talk about, the moment we've seen the prices in the market are reasonable, and we're not talking about exorbitant prices of cement, the moment the markets give us reasonable this thing, we are back with very, very good returns on capital, which happened in Q4 of FY19, which also happened in Q1 of FY20. Largely function of how the demand price scenario plays. But on a secular trend for this industry to keep attracting investors, I think the returns have to go up. There is no doubt about it.